All right. Hello, everybody. We are Archimedez International, and what we're going to be discussing today is basically how to invest in hotels, why it's important, why it's such a great, lucrative opportunity right now. And, we'll go over a couple deals that we have open that we're trying to get funded in the next week or two. And we have a few deals that we are currently looking at as far as putting into, that's in our pipeline, to give you an idea of some of the things that one, we look for, and two, that are already on our docket. And we'll look at, take a look at one of our assets that we took, that we purchased about a little less than 2 years ago, that we are exiting next month. And that way you can see what kind of success and how we go about doing our business on behalf of our investors. Okay, so like I said, my name is Danny Frye. I retired from the Army in 2019. I spent 12 years as a engineer and another 8 years in special operations, where my focus was in strategic planning. And so I've carried those tools with me outside of the military into the real estate investing space as a strategic visionary to define and identify deals that are far superior to traditional investing. My first year out of the Army in real estate, I jumped right into real estate sales as a residential realtor, and then moved into the commercial real estate space, where I've brokered self-storage, multifamily, retail, and some flex spaces. Let's see. This is David. So I'm gonna talk David up here a little bit. So David is this was a great connection when David and I met. He's close to 30 years experience in the hotel industry, particularly taking failing or failed hotels and returning them to peak performance before disposing at fair market value. Like he said, he was from Cornell, went to Cornell University. And as a graduate of Cornell, for those of you that don't know, Cornell is the premier hospitality college in the United States. Just a couple of his past projects and some of his current projects. Dave, is there anything that you want to bring up before I move on?
No, I think you did a fantastic job.
Okay, thanks, David.
Thank you.
Okay, so a little bit about who we are. We're Archimedez International. And so Archimedes was a Greek mathematician that that discovered the concept of leverage. So at the bottom, you see a quote that he's famous for: to give me a place to stand, a lever long enough, and a fulcrum, and I can move the earth. Well, what this goes, where we go from here, and why we chose this as our company namesake, it goes into that philosophy of leverage. Together we can do more. Together we can build on each other, and achieve a whole lot more. Archimedez International we're a private equity company that specializes in structuring, organizing, managing private equity investments through 506 series syndications and joint venture opportunities, with the focus in the value add flagged hotel space. Our mission is to provide alternative passive and semi-passive investment opportunities that far exceed traditional investment options like S&P index or well-balanced mutual funds, and without the volatility of the stock market, while maintaining a sacred trust with our investors and our partners, to ensure that their hard-earned money is in good hands, and it's employed in a very good manner. Our vision, we fully expect to acquire more than $1 billion in assets under management by the end of 2026, with the intent to take the company public as a REIT, or real estate investment trust, by the end of 2027, with a valuation of more than $2 billion. This year, we're on pace. Our current pace is more than 100 million in assets under management by the end of the year. All right. Some are these are our company values and our philosophy: integrity, transparency, tenacity, and diligence, and excellence. Right. We treat our investors not as clients, but as business owners, business partners, and they are entitled to honest, fair business dealings. It is our philosophy that investors should have a total faith and confidence in our ability to deliver factual and unfiltered data regarding their investment. Transparency, we will always be transparent to our, as to what our interests are with our investors and our faculty. Tenacity, it's imperative that we strive to exceed the expectation. That doesn't mean that we're going to underestimate our performance so that it flexes our performance. We're going to take a good solid look, make a cautious cautious analysis, and then we're going to go and do everything we can to exceed those expectations of what our performance will be. Diligence, our investors deserve expert analysis and diligent inspection of all of our components related to our prospective assets. We hold a sacred trust in our investor contributions, which include an exceptional level of scrutiny and analysis prior to offering, and additional care and diligence during the management process. And excellence, we're committed to excellence. We affirm that we have the best structure, access to the best assets in today's market. We ensure that we partner and employ the most competent companies and personnel that are aligned with our philosophy and our commitment to excellence. We do utilize the best attorneys, CPAs, operating partners, and other outsourced employable resources available. We understand that, I didn't go to Harvard University, to Harvard Law, but I can hire one, and, we owe it to our investors to provide the best that we can find to structure their deals. So moving on, why hotels? Why is it, what makes hotels, such a great opportunity right now? And honestly, we were already looking at a great opportunity prior to COVID-19, prior to the pandemic in 2019. David and I had built this company. David and I, along with Zeke and Mike and Ryan, had worked on building out this company to go after distressed hotels that were, cash flow positive, that had potentially been either foreclosed on or undermanaged and operated, that we could go in and add value. So nothing really changed with our process. However, the opportunities flooded the market with less competition. So COVID-19, this is just some data that we pulled from some of the think tanks that are a collaboration between NYU, Cornell, Harvard Business Review, and Wharton School of Business, that in August of 2020, there's a report that came out that 80% of all hotel loans were in jeopardy of default, and 50% of all hotel loans were expected to go into foreclosure. Well, that pretty much happened. About 50% of all hotels went into foreclosure. Now, this relationship that you see, does everybody see my cursor?
Yep.
Okay, so this is what as of that August 2020, they were looking at best case scenarios for the recovery of pre-pandemic performance. In 2021, it was actually somewhere closer to 51%, but in 2022, we are pretty close to 100% to pre-pandemic performance. And in a lot of cases, and this is an average across the national index. So, and in a lot of cases where we're looking, it is recovered better than this, and that has to do a lot with the rate of inflation. It has absolutely been beneficial to where we are at. We're buying these at a distressed value at 40 to 60 cents on the dollar, and then we're returning them to a peak performance from at that 2019 mark, and then we're having almost 8% inflation, whereas 8% inflation on the consumer price index, we were at 31% improvement to our performances across the nation. So the opportunity has not been better to get into hotels than it is right now. Additionally, the competition, there's so much inventory, and we're going to get into that here in a few seconds, but there's so much inventory out there to be had, and there's very little competition. There's very, very narrow competition. In a lot of times we're going to talk to people that are looking into syndications, whether it's as a LP, passive investor, or general partner sponsor of a syndication. We find that somewhere between 90 and 95% of investors that are focused in that area are focused mainly on the multifamily space. But that means that there's a lot of competition there. You have some big players that are in the field that are providing great returns as on the development space, but there's a gap in cash flow. It's they've got to improve it and develop it before you start seeing that cash flow. And we find a lot of operators and a lot of general partners that are struggling to find deal flow. And so this is a great opportunity to where there's virtually an unlimited amount of deal flow and a very limited amount of qualified buyers that are going to get the franchise approval or even lending solutions from the banks because of lack of experience in this space. What we have over everyone else is we have David Stahl, who has a tremendous reputation within all of the franchises and within a lot of the institutional lending and relationships, and within the brokerage, right? So those brokers that are not just a commercial jack of all trades broker, but those that specialize specifically in hotels tend to reach out to David early on, so we get first crack a lot of times, and we can be more competitive in our offering because they know David's going to close. Here's what makes hotels unique. You have minute-to-minute control of the daily rate. So in go to multifamily, or you look into retail space, what you find is that your rates are somewhat fixed. All right, you can plan to increase those values, but they're still somewhat fixed. You're subject to leases, you're subject to prior commitments that have a long-term impact. In the hotel space, we can change the rate of room rates minute to minute. David has a person on their staff that their sole responsibility is to analyze the analytical tools that give us to make sure that we are
maximizing the revenue.
Absolutely. Thank you, David. So we're going to get the most out of, we're going to get the peak performance out of our hotels because we're going to maximize performance through controlling the daily rate. Brand demand and recognition. Most flagged hotels or franchise are leveraged, allows us to leverage those franchise brands and reputations. You know what Hilton is, what Holiday Inn or Baymont or Microtel or any of these, so it's not a, we don't do too much on the independent side, although we look at acquisitions sometimes on the independent side, to further our brand, to place a flag and create that brand awareness, that brand demand. The star reports this is such an incredible product. It comes out, monthly. It's basically a monthly report card that's done by a third party on the hotel. And it's done on every single, you can pull the data for every single one of them. It's almost like cheating. You can take a look at it and see what your hotel performed, and what the comp set performed, and what the national index did for their performance. And we'll take a look at a star report so I can explain that a little bit further. Additionally, those of you that have been familiar with multifamily, or if you've done some fix and flip properties in the residential space, or have done any kind of value add anywhere, you go in with a notion of deep analysis on what it takes to improve that property, right? But at the end of the day, you got to add 20-30% into that, to make sure to cover for the unforeseen. The franchise comes down to, when it goes up for sale, the franchise will come in and they'll do a detailed, thorough inspection and produce a report that's called a PIP, a property improvement plan. And so if you want to buy their hotel, that property improvement plan is what the hotel says you need to fix this stuff if you want our franchise. So it takes a lot of that guesswork out of it. All right, a couple key terms that we're going to go over throughout this space so that you can understand where we're coming from. Where we're coming from is that average daily rate, right? That's basically the nightly. That's the nightly revenue, right? So your average rate of all occupied rooms. Okay, revenue per available room, or RevPAR. That is your ADR divided by your occupancy rate, or your total revenue, divided by the amount of rooms that you have. That's going to be really important here in a few minutes. Occupancy rate, that pretty much speaks for itself, but it's the RevPAR divided by the ADR, or the percentage of rooms that are sold. And then expense ratios. So, in relationship to our gross income and the gross and the operating expense, typically we see somewhere between 61 and 67%. And the reason you see this operating or these expense ratios as opposed to fixed expenses that you find in some other asset classes is that if we're operating at 30% occupancy, we're using less resources, right? We're using less energy. We're losing less towels. Using less toiletries. So your usage, is relative to that operating expense. So you see an averaged expense ratio over, year over year that gives you some predictability. Anything I missed there, David?
Nope, you did good.
Thank you. Okay, so here's the math, right? So gross income, that's your RevPAR times your number of rooms times the amount of days in a year, right? And that will give you your gross income from room sales. A lot of these, most of the hotels that we're looking at are going to have additional revenue through the laundry facilities, vending machines, sometimes convenience stores or restaurants and bars, or a number of different things. Some of them are going to have convention centers and things like that draw in additional income. But your gross income for room sales is your RevPAR times the number of rooms times the amount of days in a year. That'll make a lot of sense here in a second. Operating expense, it's your total annual expenses divided by your gross income. That'll give you your operating expense and your expense ratio. NOI, this is, it's not Anybody that's been into commercial real estate, I'm not going to get too much into what NOI is. ADR is your total room revenue multiplied by your occupancy rate. Your RevPAR is your average daily rate, or your ADR over your divided by your occupancy rate. And your occupancy rate is determined by your RevPAR divided by your ADR. And we'll get into that. It'll be very visual here in a second. And then cap rate. So pre-COVID, we were seeing 8.4. Right now, I know it says currently 9, but we're seeing 8.4 again. Right after, right around that August timeframe, we were seeing cap rates in the 11 percentile, and they're trending. You know, you're having cap rate compression that is trending down closer towards 7, and we're starting to see a lot of listings out there that are in that 7.75% cap rate. Valuation, NOI over the cap rate, gives you a rudimentary valuation on a hotel. Okay, and this is the STAR report. So this is like cheating, right? So as we're going through this, you see, my property occupancy rates, my property from year to date, running 12 months, running 3 months, running 12 months, what the comp set or my competitors did. And then the national index, this one's kind of strange. I'm not quite sure here because it's over 100%, but I focus mainly through our underwriting. We focus on the our property as it relates to the comp set, because that's what matters. And so, we get information on the ADR on our property and our comp set, and the same thing with the RevPAR. So I can take a look at this number right here, and what it tells me is that in the last 12 months, our property performed at 58.5% occupancy rate, and that this the comp set, underperformed us as far as occupancy rate. But if you go to the ADR, or average daily rate, that's the cost of the hotel, we're significantly underperforming the competition in our daily rate, and that's reflected in the RevPAR, right? So we understand that, we know that we can increase this number. We can increase this number. That increases our value of the hotel. So if I take this number right here, 33.49, and if you want, you can go through this math with me on a calculator, but you can multiply that 33.49 times, in this case, we have 112 rooms. And then you can multiply that by 360, and it's going to come out to you, I believe, right at about 1.5 million, right? This hotel, this one in particular, should be doing around 2 million a year, but it's underperforming. So this is where you get some of that math and why it's important, where it comes from. We can also take a look here at what our percentage of change is year over year. So in the last 12 months, we've had an increase of almost 16% on our occupancy rate, right, from 2020. And that has to do with COVID, right? Our ADR, however, has only gone up, $2. Where our competition has gone up close to 7 or close to 8. Our revenue per available room has gone up 19%, where our competition's has gone up 23%. So what this tells us, just by looking at this report, is that the average daily rate is not being managed effectively. So had it been managed effectively, you would probably see this come down slightly, but this would go up, at least to this point right here, and we would be close to here. So if you take that number, that 37,865, multiply it by 112, and then this is the running 12. So, let's take a look at the running 3. This is more likely what the future, the prospective pro forma, the 12 months in advance should be somewhere in this range. And that's a significant increase when you're talking about 112 rooms times 365 days. Here's a couple of our current offerings. This one is it's an open investment, joint venture opportunity. So, this is for somebody that is looking for something a little more active, and they want to have a little more influence in, in the strategic vision for the hotel. It's a Howard Johnson in Tallahassee, Florida, 51 rooms. We have it under contract right now for $2.75 million. It's appraised value at 3.1, so there's instant equity. We expect a disposition around 5.1, between 5.1 and 5.4 in about 3 years. The property improvement plan, or the PIP, roughly $125,000, but that's all incorporated into the capital raise. So we're looking for $950,000 from 1 to 3 partners for 40% ownership of the hotel, a clean 40% split. What that'll get them is nearly a 30% annualized rate of return. And the cash flow for year 1 is $79,000, or this year, $79,000, or around 8.3% cash on cash. Year 2, $100,000 at 10%, and year 3, $105,000 at 11%. And then we'll dispose. So it'll virtually double your, this number will virtually double between the disposition proceeds and your cash flow over 3 years. So actually, it's going to be a little bit more. So it's going to come out to about $2 million back, $950,000 and $2 million back. As a kicker on this particular deal, we are looking for, because of, it's a very specific type of investor that we're looking for here. Our company, Archimedez, is offering 30% of our equity and our acquisition, which is worth about $100,000 for somebody to bring us that investor, 1 to 3 investors at that, to come up to that 950. Okay, so the next one, this is another open offering that we have. It's another open investment. We already have about 40% of it committed, of a $1.56 million capital raise. However, we could close it next week, with an additional $450,000. This is for accredited investors only, and it's a $50,000 minimum to get into it. But this hotel is absolutely fantastic location. It's in Florence, South Carolina, right off of Interstate 95. One exit from Interstate 20. It's half the distance between Miami and New York City. We picked it up for $4.4 million. It appraised at 5.2. We look at disposing in 3 to 4 years at 9.1 with $400,000 PIP that is almost exclusively refurbishing. It's a little, the furniture and everything's a little dated. And that's something that won't affect our day-to-day operations at all, because we'll be able to scale that into 5 to 10% of the rooms down at a time, during times where we know we're going to have 20%, 30% vacancy. Internal rate of return is right around 23%. We're offering a 7% preferred return, and this is the cash flows. So for the totality of the general partners, but this will pass down individually or not the general partners, I'm sorry, the limited partners. And then this will pass down in totality to, or pro rata to our limited partners. This has a lot of great opportunities. The STAR report that we looked at a few minutes ago was on this particular property. Like I said, last year it did about 1.5 million in revenue, gross revenue. This year we expect to do right around 1.8, because we're taking it over. We're missing a quarter of operation. But by the second year, we'll have completed the improvement plan. We can increase the ADR above the comp set, and we'll see around 2.2 million in gross, while maintaining 63% operating ratio or expense ratio. And then by, year 4, you're going to be looking at about close to 11.25% cash on cash return from your investment. All right. So in the pipeline, here's a few that we're working in the pipeline. Our capabilities are virtually only limited to the amount of capital that we have access to. So we've been entertaining some conversations with people that are looking for a few things that are, a little more expensive. Some people, $950,000 is not a big deal. $50,000 is not a big deal, but they'd like to see something, a $25 million asset. So here are some of the ones that we are actually taking a look at and leaning forward to pursue in the second quarter. This one doesn't have a flag. It's it's in Missouri around the Lake of the Ozarks. Anybody familiar with that area, Branson, Missouri, Lake of the Ozarks, knows that this is, basically the vacation spot for the Midwest. 170 rooms. You're looking at about a $7 million acquisition price. Currently appraised at 8.5. And we look to dispose in 5 to 7 years at around 20 million. Property improvement plan is going to be about $2 million. And we'll look to leveraging that if we can. Internal rate of return is going to be between 20 and 30%, with cash flows between 7 and 12%, and a 5 to 7 year term. The Radisson, Branson, same area, 472 rooms, purchase price of 12 million, which is extremely cheap. The appraised value currently is around 17 million. So there's instant equity. It is performing, so there is positive cash flow. Disposition values be around 50 million and the PIPs at 15. And the reason it's so high is this was built in 1993, and the owners have not maintained the updating that is required for them to do during that entire period. So it needs to be there's a lot that needs to be done here. But the upside is phenomenal, and it's already cash flow positive. And then again, our terms, we're looking at 26 to 30% internal rate of return with a 7 to 14% cash flow, 5 to 7 year term. Holiday Inn Express Fort Myers. This one is excellent. It's right. This one's like right by the beach, right, David?
Yep.
122 rooms. We feel like we can get it for about 10 million. It's appraised at 12.5, and we look at a disposition between 18 and 20 million with a property improvement plan around 2 million. An additional value to that is there's a vacant land lot attached to the property that has a value of 1.5 million. And because this is in Fort Myers, the land is appreciating at an incredible rate. So that could, that's going to help drive the disposition value. There's also some very creative options that we have. So as we discussed earlier in our, us being able to perform, exceed your expectations on our performance. We've made contact and we've made connections with a lot of incredible individuals with creative solutions. And in this case, that lot, we can sell that land, sever the land and sell it off at to a ground lease company and get some additional capital driven to the hotel. So there's a lot of additional options outside of just us coming in, fixing the management, putting a little bit of improvement back into the property. 22 to 24% internal rate of return with a cash flow of 7 to 12% and a 5-year term. Okay, this one is incredible. So this was the first hotel we bought post-pandemic. It was a Baymont Inn in Jessup, Georgia. We picked it up in September of 2020 for $997,000. We assumed the existing loan on it for $675,000. And it was a 15-year loan, so it was really, really aggressive. Had instant equity in it. It was appraised at right about 1.7 million, right around the time we picked it up. The total capital raise on this one was $450,000. The property improvement plan was $100,000. Our performance after our first year exceeded our third year projections, which was absolutely incredible. It is under contract right now. It was supposed to be a 5-year hold, but because the performance reached or exceed our expectations, we took a look at being able to exit early for an ROI around 80% instead of drawing it out for 5 years at about a 22%, 23% internal rate of return. A couple pictures on here to give you an idea of what David was able to do with it. As you can see, painted the outside and it made a huge difference. The lobby absolutely looks incredible, from this 1990s look to, more modern lobby. Same thing with the breakfast area. And as you can see, the pool, the pump had to be completely rebuilt. The pool had to be sandblasted and cleaned. This had to be resurfaced. And David was able to get all of this done at about 40% of what our predicted PIP expenses were expected to be. Okay, so what we're looking for, what are we looking for, and how can you get involved from here is, we're looking for limited partners, accredited and non-accredited investors that are looking to for completely passive investment opportunities. And we don't even look at them. I mean, we completely throw them in the trash if I can't get the investor a 20% or greater internal rate of return. Joint venture partners, accredited investors are looking for a bit more to be a bit more active and involved in the decision-making process of the deal strategy. General partners, so sponsors and syndicators that have a robust investor network that may be struggling with quality deal flow. We encounter this a lot, and that is something that we have absolutely no problem with, is deal flow. And then existing funds, so a capital fund that's structured, that are looking for a quality operator or manager to deploy their liquidity. This is what we're looking for, and that's how you can get involved with our company. Just a couple of important contacts, and we'll push this information out. But at this time, that completes the presentation. But I do want to take a minute and go back to the alibi. So as you see these 3 deals right here, there are another 42 properties that are going up for auction next week at around 10 to 20 cents on the dollar. And we have a running list of about 100 different assets that range from a $1.5 million acquisition price up to $150 million acquisition on our, that are all viable and with similar or better terms than what we're displaying right here. David, did I leave anything out?
Nope, you did fantastic.
Okay, anything you want to discuss?
Nope, not in particular. If anybody, when we get to the questions and answers about the 2 deals that are in front of us, I would be glad to answer.
Okay. Well, with that being said, I'm going to open it up to the group for questions. James, do you have anything? Any concerns or questions? Anything you want to ask David about, potentially what his plans are and his processes on how he identifies them or how he takes them to the next level?
Yeah, I was wondering, For this deal in Tallahassee, that this is the joint venture deal, right?
Yes.
Correct.
Okay. So I was wondering, how come this one is a joint venture and not a 506 B or C?
That's a great question. So we already have a 506C open, right? Before we went for the Tallahassee deal. So, and I had been meeting with quite a few investors that were more interested in having an active role. And it just made sense to structure this one in that way, to be able to offer, two different deals at the same time under two different structurings for two different types of investors. Additionally, because we offered it up as a joint venture, the structuring of the deal cost us about $20,000 less than a syndication does, and our operating expenses. So in the joint venture, David, his accounting team is going to, it's not going to get pushed to me after the fact. It's going to retain with David, and then David will issue the distributions based on what the joint venture partner wants to do. For us, on a 506, something like this, it costs us about $20,000 on the legal expenses. We had an additional $10,000 on annual operations to, because David sends it to us, and then, for the investors portion of the ownership, and then we still have to account and manage and distribute. So it's an additional expense. So if hopefully that answers your question.
Danny, to elaborate that a little bit more for anybody that's listening in or it's on, what is the minimum buy-in for Florence? Is that at $50,000?
Yeah, so Florence is open for accredited investors only. It's a 506C. We started it as a 506B, brought in some non-accredited investors, and then we did a conversion so that, to offer it to the accredited investors and allow us to advertise and market. And we've increased the minimum commitment to $50,000.
So you can invest $50,000 or all the way up to close out the deal on this particular project. Where if we switch to Tallahassee, that one there, we're at 320,000. Am I correct for the minimum buy-in?
Yeah, it's a 320 minimum buy-in. Because it's a joint venture, we can only have up to 1 to 3 partners is where our comfort zone is. Simply because if you start adding many more partners than that, it starts to appear like a syndication, in which case we didn't structure it that way. And it can generate some additional scrutiny from the SEC because it looks like a syndication and not a joint venture, if that makes sense.
So yeah, I was wondering also for the Howard Johnson, what was the gross? What was the T12 on the gross revenue?
Sure, it was. I believe it was It was right at $1 million. I do have that presentation on the website, and I can get with you after this to go into some more specific detail. But I believe the gross was right around $1 million. Plus or minus 100,000 or so for the previous 12. But what we're looking at, the occupancy was great, and the location is fantastic.
It's right down the road from the Capitol. You cannot get any better there's no properties for sale in this vicinity at this price whatsoever. The property that was right down the road, like 2 hotels down, just sold, I think, for $6 million. And it is the same size as ours.
6 billion. Okay, so is it a similar comp set, or is it like a Hilton or Marriott?
No, it's a Choice brand property.
Choice brand. Okay.
Yeah, so our first year, and Danny can send you out the more details. The hotel we should run right around 900,000 our first year, and then scale it from there. We are doing $125,000 PIP. That is to update the furniture, the lighting package, some of the outside fixes, add some new case goods. Our PIPs really go, it's all back into the property, and every penny adds almost 3 to 4 times value. So, but our year 2, we're looking to scale it over $1 million a year in sales, keeping in line with the numbers. And I don't want to misspeak, or but I think what Danny is up there, it's around 8% return on your investment. Yes.
Yeah, in year 1, just on the cash flow, it's this year to be around 8%, and next year you're going to be in excess of 10%.
And I want to just mention this for some people that are more interested. I mean, this is a real estate piece of property. You guys can physically go there, see it, touch it, visit it, go on tours with me, any information that you ever have, I'm at your direct disposal. So it is a good deal.
Yeah, and we will schedule property tours, and something else that we provide is that any property that we have, that you're an investor in, you can stay there for free as long as there's vacancy. Right, David?
That is correct. For Tallahassee, not why Congress is in session, because it's going to be $300 a night.
Yeah, right.
So okay, so with the Howard Johnson deal, it's 3-year hold.
Well,
Yep.
That's very flexible, James. That is the plan. So as we were going through this, we initially wanted to do a 5-year hold. But once we compressed it to a 3-year, the internal rate of return went up so substantially, just because of the time value of money factor. However, because this is a joint venture, and the JV partners there's an obligation to have periodic discussions on the strategy or the strategic vision for the asset. If we want to hold it, if you want to hold it, we'll hold it. If we get to a point to where we're looking at it and you want to early exit, we'll early exit. It just, whatever makes the most sense. And that's what gives this one a little more, for that specific person that's actually looking at, wanting to have a little more influence and active role in the company as a JV partner. They're going to have that here.
Mm-hmm. So with this is being purchased as a approximate 3x multiple of the gross, or?
Yes.
Okay. So I'm just looking at the assumptions. So if so you guys are projecting to have a $2 million gross when exit?
No. You're talking about on the gross revenue?
Yeah.
No. I believe I'll have to pull it, but I believe it's around 1.4, 1.3 on gross revenue. But one of the things that we're looking at here is
Land value.
the land value.
And there is hotels in this market are selling between 4 to 6 times revenue multipliers, just because there is no inventory of hotels for sale here. And this property in particular, if we ever wanted to down the line, if the partners want to hold it, would be a great opportunity in 5-7 years to bulldoze it and build something brand spanking new, just because the land value is going to be there.
Mm-hmm. So is this an auction deal, or this is a
Nope, we have this currently under contract. This particular property does have a separate piece of parcel of land on it that adds a little extra value to the deal. But it's definitely a value add. It's being completely mismanaged at the moment. They are not, their rates are like flat. So when nothing's going on, they're like at $50 to $60. All the hotels around them are much higher. They're selling out. So the hotel is, performing on the side of revenue, but it's not maximizing the rates. They're not using revenue management tools. They're not doing any sales and marketing. They're underselling themselves. So when we go in and we put a whole new FF&E package on this, even though it's a Howard Johnson's, we can demand a higher rate because there's not going to be no other competition that has brand new rooms in it within probably 2 miles and nothing of this kind of hotel. All the other hotels closer to the capital are very high end and charging $150 to $200 on a normal night, $400 to $500 when Congress is in session, or if there's a football game or something going down at the university. So a lot of people that we talk to are like, oh, it's a Howard Johnson's. Well, don't look at it as a name. You're looking at it as this, where the property is. It is a franchised hotel. We're going to make it better than probably all of the other Howard Johnsons in probably the state. So it's really going to be, after we're done with the renovations, it'll probably be award-winning just off of the renovations that we're planning on doing.
So I was wondering, for the FF&E, do you think it will qualify for hotel liquidators, or were you guys brand new?
So all of the furniture that we put into the property will all be brand new. We will sell off the old case goods. Probably we'll get maybe $200 a room for it. But until we get in there, I'm not sure what the price of the selling of their furniture will be.
And then how much? And then for the new FF&E, how much do you think it will be per key?
Well, we are, if we can get the ordering in placed and get it distributed and ordered, we can probably get the full FF&E complete package probably at $2,000 a key.
Okay, $2,000 a key. Okay, so this is a limited service, right?
Correct.
Limited service. So in your experience, what's the percentage of the expenses for a limited service and compared to the gross revenue?
So I think we're probably going to be, Danny, what did we budget for this? Right at 65%?
Yeah, I think we were at 65% on this one.
Yeah, it is. This is a small property. The problem with this one here is its payroll expenses are a little bit higher because it is in the city of Tallahassee. So finding good quality employees, our expense on that side was a little higher.
Okay. So, I mean, in your experience, something that's 50 key, it can handle the salary of a GM, right?
Yes. Yep. We are actually transferring one of our general manager, or a assistant general manager that's been in our training program on the management company side for the last year. Will be taking over this property. So instead of hiring a normal GM salary is around $50,000 a year, she's going to be coming in because she's coming off of an AGM job. Her base salary is, I think, 38. And that includes a small bonus plan.
38. So you guys project that it's 38 for the whole holding period?
It's 38,000 for the GM salary. I thought that's what you're asking.
Oh yeah, no, I was asking, do you see that as the whole holding period that you can retain her for 38,000?
Give or take, probably every year there's going to be a raise on that, but under 40.
Okay. So and then what, for example, but no, let's say normally, what revenue, how much revenue or how many keys will determine that you can pay like a GM to handle it? So it's not like a mom and pop owner operator.
Well, every particular hotel is different. For this particular hotel and the quality of hotel we want this to become, we have to have a decent general manager that can handle everything at the property level. Our training program through the management company is pretty intense. She's been wanting to learn and grow with us, and we haven't really had any general manager positions available. So she is going to be leaving another one of our hotels and moving here. She will be staying on property, so that 38,000 includes her housing.
Okay.
So actually, if we factor it in, her total package probably equates to $45,000.
Okay. Can we go over the other deal as well?
Absolutely. So this one is the Baymont Inn in Florence. So David, I'm gonna let you go. Just take it over, man. I think you're on a roll.
Yep, no problem. What did you have a particular question? So right here, I know we were talking about the entry on this is $50,000 per share. That's good for this property here. The full PIP is going to the guest rooms. It's on a great highway. It has lots of traffic. It's always performed over the last how many years. The owner of this current property are in their 80s and they are retiring. So when you looked on the slide before, what Danny was showing was the ADR was very, very low. Just for our revenue management's sake, with managing everything properly, sporting events, high demand peak areas, we're predicting to generate additional $200,000 alone just in revenue management. This property has currently it's running with a little more expense. We're going to be able to trim that down quite a bit to get ours operating at normal hotel rates or hotel percentages.
Okay. So what's the T12 gross revenue on this?
So it
was 1.5 last year, just a little over, like 1.503.
Yep.
Okay, 1.5. So it's trading around 3x.
Yes, correct. Well, yes, that's what it's trading for. The appraisal was just done a month ago, so the actual value of the property is 5.2. We bought this. We bought it very, very well. The property was trying to be for sale. What was it, Danny? 4.9?
Yeah, 4.9.
4.9, and we really stole it at 4.4. It was almost an inside deal with it. So we did get it at a very, very good price. And the minute we close on it, if we ever wanted to sell it early or what have you, there is instant equity there. But we're predicting taking it from 1.5 to 1.8, I believe, the first year, just with revenue management. And that is why we're going through the refurb. This PIP is a little bit higher. There's more room counts. All the furniture is fairly old. This one here, we're replacing some of the mattresses. So that $400,000 PIP is really going to equate to 3 to 4 times that in additional equity.
Mhm. So the what's the cost per key for the FF&E?
For
3,000.
for the renovations.
Yeah,
Let me see
Yeah,
if I,
it was 3,000.
okay.
3,000. Okay, 3,000. And that includes the mattresses, furniture, TV, possibly.
The TVs, I believe, were good. That wasn't on the list.
Mhm.
There was only around 20% of the hotel we needed to change the mattresses, and those were, I think they were all going to be changed out in the PIP. So yes, $3,000 a key, I believe what Danny said was budgeted.
And then you have to go through their preferred vendor.
So because it's a Wyndham property, they give us a list of 5 suppliers. All of the mattresses, the towels, the sheets, the pillows, the pillowcases, all of the guest room supplies have to say by Wyndham. So we have to go through those 5 to 6 distributors. Whoever has stuff on sale, that's usually where we get it from every month.
Okay.
And the
So-
same thing with the mattresses. They all have to say, by Wyndham on it now. So
Mhm.
when those get switched out, hotel mattresses are only good for 10 years. So once they reach those lives, they have to go, or we'll get dinged on it when Wyndham comes out and does their quarterly inspections.
Mhm. Okay. So where do you see the exit gross revenue being at?
I think we planned 2.2,
I think we were closer to 2.4.
2.4.
Yeah, I think we were looking at 2.2 next year.
Okay, yep, that seems right.
2.4. Okay, so 2.4, and then what's the going multiple, gross multiple in that area right currently?
Low end, it's 4 all the way up to 6.
6 in Florence.
Yeah, based on the product. Don't forget this property is going to be completely refurbed with all new FF&E. There is no new hotels in this area, and there's nothing going to be built in the pipeline. So you can't, if you're going to go and you're going to buy some land and you're going to build a property, the only flags that are going to be available is probably going to be a Hilton Garden Inn, and it's going to cost you $15 to $20 million to buy, just to build it, plus the cost of the land. So it will be a complete value add by additional a new owner going through and refurbing it again if they so desired. But it's only going to be what's the whole time, 5 years. All the FF&E is going to be 5 years. So
That's I've talked to a few investors, and they were saying that in places like LA is around a 5x multiple. Well, at least since last time I talked to them, which is in August, right? So do you feel that in a couple of years it'll be 6 times multiple in that area?
Depending on the particular market, the area, the demands. I think based on what this property is going to do and perform at, with our margins, it will put it in a tier above some of the comp set. There's nothing for sale, I don't think, for 50 or 100 miles. So the demand for setting price of the hotel would really be in our favor.
Okay. So projected gross revenue is 2.4. So what is that a multiple of for 9.1, right?
9.1 divided by. Let me double check my math.
Okay.
It's around 4 times multiplier, just a little under. So 3.75% multiplier, which is completely feasible.
Yeah, 3.75 seems more reasonable than 5 or 6. Okay. And then what was your what do you do to negotiate down from because you were saying that you got it down like 400 grand.
It's really based on my experience with the brokers who has it. Some of the brokers I have done several deals with, and for this particular deal, they wanted me to give 100% commitment that we would close because they want to retire. The owner doesn't want to sit on the asset. I 100% guaranteed the loan on this and 100% guaranteed that it was going to close. We put up a non-refundable hard money deposit, I think day one. So that really gives us a little bit extra negotiating power when we go into these deals. I do get deals that come directly from the bank because they are aware that when I say I'm going to close something, we're going to get the job done.
So you gave 1% money hard. Was it 1% or?
Yeah, I think it was $100,000. They won the money went hard, I believe.
Okay. All right. I mean, that definitely
It talks volumes,
Yeah, definitely for sure. And then what kind of debt options are you
This
projected?
this is going a USDA loan.
Okay.
If we can get this closed out by the end of the month, we'll be able to lock in the interest rate. It is locked in, but it needs to close by the end of this quarter. If it closes after April 1st, there's an interest rate hike, and it'll probably cost us, maybe another $750 a month in interest because of the hike. So really time is of the essence to close out these deals as close and fast as possible.
And then the Tallahassee deal is also, what's the financing on that?
That one is SBA. I 100% guarantee the loan. That is ready to execute as soon as we finish off raising the funds. So if we can close that on Monday is if we have an investor.
So SBA, there's a cap at what, 7.5?
What, the interest rate?
No, the amount, the loan amount.
So the SBA goes by the person. So SBA can loan up to $5 million per person. If there is additional investors, that it goes by person.
By person, okay, so 5 million per person.
Yeah, but I personally guaranteed both of these loans, so investors wouldn't have nothing to worry about on those.
No recourse.
So
yeah, correct.
Have you had SBA loans previously, or?
Yeah, I have. I'm using the same bank that I just sold a property out of. It gave me the additional money from selling the other one, so I was able to get a SBA loan. There is conventional loans that we can take out every day of the week. The problem with conventional loans is they're requiring 25 to 30% down, which changes the margins on the raise for investors. So in front of you today is a USDA loan and a SBA loan to keep those numbers down. Going forward, it'll kind of change depending on the particular hotel that we're going after.
And so what are the rates for either one, and what was the down payment? Was it 20 down for both of them, or?
Yep, it's 20% down, and I think the interest rates are
5.25.
perfect. Thank you.
5.25. Okay, all right.
Right this minute, if we closed it out by the end of the month.
Okay.
James, some great inquiry. Anything else that you have regarding the hotel, or anything else for David?
Yeah, like for example, the larger deals you were talking about earlier, right? So that's something that that's a auction.
Yeah, these are particular, we have these currently in underwriting. We're underwriting it on our side, Danny underwrites it on his side, then we have a meeting, and then we go over what we're gonna move forward with next. After we close out the Tallahassee deal, then we'll be bringing on another property.
Okay, so you guys are still on the underwriting phase.
Yes, we're there. It's almost done. It's just the numbers that you have up there is what we are confident on as of right this minute.
Okay.
But we do have other deals coming in the pipeline. So if you do come on board with us on one of these other properties, you'll have direct access to everything else we have coming too.
So it seems like you guys are focused on tertiary markets, right?
Not directly. We are more of where are we going to find the best deal, the more bang for our investors. Like Danny said before, if it doesn't give a IRR of 20%, we don't even continue underwriting it, and we pass on it.
Okay.
Yeah, additionally, we do have 6 offers in right now on properties around that 5 million mark, right? That 3 to 5 million mark, David.
Correct.
Okay. And which markets, by the way?
Louisiana, Texas, Florida, Georgia,
North Carolina.
North Carolina. Yes.
What part of Texas and Florida?
San Antonio, we're looking at a property in Ocala. We have that large Holiday Inn that's in Tampa. There is a couple properties that we're eyeballing in Daytona Beach. We're looking at a large property in Kissimmee.
Have you followed up with my friend Mike Modi about his hotel?
No, we didn't discuss his hotel. We discussed, the options that, we're presenting today. He was actually going to try and get on the call tonight, but he had some, he's got some family in town.
Okay. You guys should definitely talk. I think it's an opportunity.
Yep, I'll definitely connect with him probably tomorrow and see, to get a little more information on that one.
Okay.
So, because we're recording this, I know he wanted to be a part of it, so we're going to send out the link to him so he can review it.
Okay, yeah, for sure. I think it's a good opportunity because they don't do any revenue management, right? They don't have dynamic pricing. It's a mom and pop owned for 40 years. So, I think it's an opportunity. Plus there's like additional acreage for development.
Fantastic.
And it's right outside. It's basically, DFW.
Oh, nice.
So, yeah. So it's just right out, just west of Fort Worth. So it's definitely.
What's the name of it?
It is a budget host inn. So it is flagged. It's not a strong flag. I don't know if there's any liquidated damages. I don't know how much it is or if there is much. But
It's who is it for sale? For some reason, I thought that it does sound familiar.
yeah, it's currently flagged as a budget host inn. There's they don't use any OTAs, so it's not marketed online.
Yeah.
Right? So they have it all just local traffic.
Yeah. What is that
Right.
for sale for? Was that for sale for like 15 million?
No, no, it wasn't for sale for 15 million. For the price, you have to talk to him,
Okay.
but I think it's a good opportunity because it's not man, it's a classic case of mom and pop management,
Yeah.
old school management. They still have ledgers on paper,
Yep.
you know.
That's mom and pop old school.
So that there's a lot of upside in that because once
Yeah.
you can modernize the operations and actually put the hotel on the OTA or advertise it online, and of course you can do some PIP, refresh the FF&E, possibly change a flag, or you can develop too.
That was a good market until COVID hit it. It got hit massively hard in that area. There's actually, I think, 10 foreclosures in the Dallas-Fort Worth area that came across my desk over the last couple months. So I am familiar with the market of that area just because there's been so many foreclosure deals. But we'll most certainly take a look at it.
Yeah, for sure. I mean, and once again, it fits your criteria that it's cash flowing from day one,
Yeah. No, good. We'll take a look at it. Thank you.
Okay, no problem.
Anybody else have any questions, or did you have any more questions, James?
I think I'm okay for now. It's it was definitely great. Listening to
And
both.
tomorrow, if you have any other questions, I know Danny flashed my email and my phone number. I'm always available, or me and Danny can hop on a call with you if you have questions. I'm not sure what his schedule is, but we can always make time if it's something you're considering for the Tallahassee or Florence deal.
Okay. Yeah, I'll definitely let you guys know.
Okay. And James, I'll pass David's contact information to you, following this meeting to you.
Okay.
It's in our philosophy that, we're not looking for clients and people at, more than arm's length distance. We're trying to develop lifelong relationships to move forward and continue to build and grow in a very close relationship oriented infrastructure.
We're all family.
Yeah.
Yeah, for sure. Sounds great.
All right, perfect. So Ryan or anybody else have to test? Did you have anything you wanted to bring up?
No, Danny, questions James asked very good questions, very informative, and I think Dave and yourself answered quite well and had the backing and the experience to provide the information, so that was good. Yeah, it looks like some really good deals in the pipeline right now. I'm excited to see how this turns out over the next few years.
Yeah, absolutely. Alide, did you have any questions for me or David or in regards to the hotels?
No, I'm just mind blown. Everything sounds great for me. I'm taking notes over here.
Ryan or James McClary?
No, I'm just really excited to see how we're gonna make $1 billion funnel. This could be a lot of fun. There's so many deals. We're about to get that term sheet for the fund next week, so I'm really excited about how much momentum we're gonna build this year.
Good. Absolutely. And now you have an idea of
Yeah, man, it's nuts.
This whole presentation today is everything in a nutshell.
We're gonna acquire like hundreds of millions like very quickly, and it's just gonna grow. But it's all about just funneling, right? It's just driving traffic, and yeah, I'm really excited about being able to get more people to these presentations. And then I have a lot of ideas, I feel like, on how we can help with the marketing on the individual hotels in the long run. So it's gonna be a lot of fun.
Great. Good.
It's gonna be a lot of fun. I was just at a seminar just now, right? Like, I was at a business seminar at the hotel.
Yeah.
So many different ways to diversify and create incomes, like different funneling, like B2C, like there's a lot.
The funnel and the hotel fund, Ryan.
Yeah, like you can really have different funnels for different like income streams, like host events and such, and like create that income. So.
And we're so
Yeah.
we don't discriminate on the hotel. If it's making money and we can, get a good return on it, it doesn't matter if it's a Howard Johnson's, a Days Inn, a Ritz-Carlton, a Ramada, whatever, America's Best Value Inn. As long as it's performing, we can add a value add to it. Or if we can get it at a really discounted price at auction, we're going to try to capture that asset.
Yeah, absolutely.
And you just
And
have a
that was a
talent pool for all of these, like, how do you hire the people? Do you kick them out or?
What was the question?
So when you get them, do you retrain? Do you fire like the staff, or they're just like?
So honestly, that's 90% of the staff does get turned over, and we try our hardest to retrain them in a way to capture and help them learn to grow with us. But sometimes the old employee's mindset is not there, and they're not willing to learn new things, and they think that they knew better. And we're trying to tell them, like, look, your hotel is doing $800,000 a year in sales. All of our numbers and our data is saying we should be doing 1.2. It's stuck where it is because the staff is not willing to go over and beyond and sell it better. So we that's why 90% of the staff does get changed over. We have a good training program, inside our management company of growing anybody that wants to learn. We put them through a training program. I have 4 AGMs that are ready to take over properties into GM positions that can be trained and relocated. And that helps us a lot. So when AGMs become GMs, they're driven. They want to succeed. They want to prove themselves. They want to take themselves to the next level. They want to make more money. They want to hit the bonus plans that the GMs were making, and just makes them stronger. So sorry, I got off on a tangent.
No, yeah, that was like a big question. Was just like I'm sure like the retraining is a big expense of that's like the process.
Yeah.
How long does it usually take to install the new team or get the company running the way like it should be?
A month.
Awesome. That's
Yeah.
cool.
Depending on and that's an average size. We're talking, since that Holiday Inn is on the screen, that's going to take a little bit longer. It's a little more bigger. Holiday Inn has a lot more red tape, a lot more training programs that the staff has to go through. When it's a Holiday Inn, the turnover is actually a little bit less than a mid-scale property because they already went through it. They have guidelines for for the Holiday Inns. So it is probably 15% less on turnover on a full service hotel like that. And that also is because their wages on a IHG property are a little bit higher than on an America's Best Value Inn, a Baymont, Wyndham properties. Usually the GM, the line managers are a little bit higher, and then the staff themselves is a little bit lower.
Excellent.
I got a question right now, and this is an issue that's been, that multiple industries, but especially hospitality has been has an issue with it. Is how do you attract and retain staffing, especially housekeeping?
So we are a strong believer in a hands-on management approach with the staff. 90% of all employees quit because of a work-related incident, because of a manager, or they don't feel like they're being valued in worth. And during this whole thing of COVID, we maintained almost all of our staff, and we lost barely anything. And it's very easy for a property of one of ours that are operating well, that housekeepers talk, maintenance people talk. If you're in a city and you've been there, you get a good reputation of, go work for David and, he'll take care of you. I have a lot of long-term employees that would probably never leave me.
So I guess, so
It's
you
how you
guys,
treat employees on, keeping them. We have a training program for all of the staff. The general managers attend work-related hiring events in the areas to try to keep or to hire employees. A lot of employee hiring is word of mouth in our experience over the last years with COVID. So it's people looking for a job that get referred to, and they always ask questions of what's it like to work there. So we really haven't had any problems retaining.
that's good. And you guys only focused on limited service, right?
Nope. Wherever we can find a great deal to pass along to the investors. We're looking at the Holiday Inn. That's a full service. Radisson. That's a monster.
Yeah.
Massive amount of food and beverage, restaurant, bars, massive banquet space. That banquet space in that Radisson's doing almost, I think, $2 million a year just in banquets.
Yeah.
So when I mentioned that, I meant like in your previous track record, has it been
Nope.
all?
Nope, all over. Nope.
Okay. And then your previous, I guess, track record, that's been all posted on the webinar?
Those are some of them. I've been in the hotel business for 25 years. I have experience with Radisson's, Country Inn and Suites, Holiday Inns, Hilton's, Marriott's. The list is fairly long that when we do the presentations, we just highlight the last probably 5 years of what we have done or what we're currently working on. But between me and my corporate staff, we have handled every single brand that's out there.
Okay. So, I mean, and this next question is pretty important because, hospitality, it's a high risk, high reward. So we know that it's not all sunny days. So can you let us know about what of some of the deals that did go bad and the reasonings behind it?
I have lost 2 properties in my whole entire career. One was I lost it during a fire, and the other one was, so I'll say this, none of my companies that we've ever owned or operated have ever went bankrupt. We had one property that we took over on a management side from the bank that they wanted us to keep and run on and buy, and we declined it. The property needed so much money in PIP, and the bank wouldn't give us the money needed to update the property, so we gave it back to them. But that was the only incident in 25 years.
Okay.
And it was more of a banking conflict with the current owner.
Okay. And then the one with the fire, the insurance company didn't take care of that?
So I will be completely honest with you. It was when I was first starting out, and I started owning my own properties, and I didn't know any better. I was underinsured by a lot. I took out the minimums, and never ever will I made that mistake again.
Okay.
So It was my own fault early on. I didn't know any better. Insurance is very expensive. And I just did the minimums, and you never think you're going to lose your business to a fire. And it was, knock on wood, hopefully it never happens again.
Yeah, no, it's understandable. I mean, if you talk to most hoteliers that own quite a bit of hotels, I mean, things happen, they lose hotels. It's just part of the business.
Yeah. Yeah. And my experience is vast with working with banks. We've done a lot of receivership deals over the years that the banks reach out to me and my company that foreclose on the owners. And sometimes they let me have it for a year and, let us try to revamp it. Sometimes the banks give us money to do PIPs and improvements. On some incidents, we have just bought the property right from the bank. Some of them, they try to make as much money as they can. So we stopped getting out of the receivership type of business and focus more on our own. So, but it's always there.
Can you hear me?
Yep, I can hear you now.
Okay, so have you guys previously bought a non-performing notes and then foreclosed on the borrower yourself?
So I've done it once. It is a lot of risk and a huge amount of legal expense. Right now, it's not our focus of what Danny and myself are trying to accomplish right now. But there is a lot of deals that come across our desk. After we get a little more stabilized, it's something that we could look into, but it's really not our focus.
Okay.
Yeah, there's just so much deal flow right now that we've got this awesome niche.
Another question too. Have you guys been seeing shut down full conference centers?
So during COVID, there was a massive amount of conference centers that did close due to the fact that all corporate business have stopped doing their corporate functions. And that is I've started seeing rebookings coming through for 2023. We're getting some last minute things for 2022, but no major large conventions that we have seen for 2022. It's all looking like 23 and on.
Mm-hmm.
So like when we're talking about the Radisson and stuff like that, that property always has conventions and stuff on their books. But probably going forward, it's going to be a lot more, especially if, we do go after that hotel and we do a full refurb. That will be the largest premier property once it's done.
So have you came across any ones that are completely shut down?
Like hotels that are completely closed?
Yeah, that are like full conference centers and have suites.
Yeah, there's definitely some properties that we've looked at that are large full service. The bank foreclosed on them. They sent them to auction. No one bought them, and they're sitting vacant. There is that I personally know of. I think there's 4 or 5 that are large. It would need a massive amount of capital.
Like how much you think, and what markets?
There's 2 in Michigan. There is there's one in Florida. I think there's one in Wisconsin. I don't have it directly at my fingertips, but you're talking, we would need probably $30 million in cash to even do anything with them because they're shut down. Even with my great banking, contacts, it's going to be very, very hard to get a loan on these large properties that have fully gone under and closed. So, we're going to need $30 million just to acquire the property, renovate the property, and then get it back going. And then once it gets back going, it probably has a $20 million profit margin flip on it. But it does take a lot.
Okay, so it's and is REO?
It's what?
It's bank owned.
Yes, there's several bank owners.
Okay, all right. Okay.
They probably won't be coming on the market in 2022. When I talk to the bankers, they're probably going to hold the assets for another year until everything fully recovers to try to put it back on the market and get a good return from themselves. But if it ever came across and, we had the investors, it's something I probably could go after and they would sell it to me.
Okay. Okay.
Hotels is the deal.
Yeah. Me and Danny keep saying we have deals for days. We just need the capital.
Yeah, man.
That cash flow sounds pretty good.
Yeah, it's great. Yeah, I love them.
Yeah.
All right. Well, James, like I said, I'll pass David's contact information to you. If you want to connect sometime this weekend, shoot me a text or an email or give me a call and we'll set something up. I'm pretty flexible. I think David's pretty flexible this weekend.
Yep.
And really, our immediate needs are to try to get these two knocked out before the end of the month. At least the 450 on the Florence and I think we're at 650 on Tallahassee just to close the real estate.
Yeah.
But they're
if you can swing it and do the full 950 to buy that out, it's a great, to get in to it with us and, learn how we operate a little bit better or what have you. It's a really a good opportunity. And the numbers are there on both of those. They're instant equity.
Yep.
Okay.
So, all right. If there's no more questions, so I'm going to go ahead and wrap this up, and I'll do some follow up later on. Probably early tomorrow.
Okay. Can you send me a copy of this of the Zoom?
Yeah, absolutely. I can.
Okay.
I'll shoot you the link in an email.
Okay. Thank you.
To me too, please.
Yep, I sure will, Lee.
Okay, thank you.
Okay. Thank you, everyone.
All right, you
Bye,
guys have a good night, fellas.
Okay, thank you. Y'all have a good night.
Yep.
Thank you.
Cheers, guys.
It's
Bye.
All right.
Dude, I'm so excited.
Oh, me
Good
too,
now.
buddy. I didn't hang up.
I-